Hey traders, what's happening? Jamie Setley here. It is August 29th, 2018, and this is the SB Trade Desk Midweek Strategy webinar. So let me know that you can hear me and that you can see the screen. Yes, says Ty and Marco and Peter. Good. My voice is a little messed up today. I've got quite a sore throat. I think my 4-year-old got me a little sick here. As school starts back up again, you get all the wondrous little kid germs coming back into your house. So with that, we will get started. Not a whole lot to add to the dollar generally, right? So we kind of actually looked at DXY last week a little bit more than we usually do, but you can see that we're coming down into what I'd consider kind of the first real test, right? For US dollar itself. This is the Dow Jones FXCM index that we like to look at. And the level that, in question that we're talking about being tested is, from several different things. You've got the high from back November of last year. You've got this low from August, pretty close to that as well, at about 12,102. And of course, we have the parallel, the long-term 25 line that is from the channel that goes back to 2011. Right, so that channel, you can look at it on a short-term chart and you can see it, but you can see it very well on the weekly chart. You can see the support that was there really a year ago, right? This was last September of 2017. We had the breakdown there in January. We had resistance there for a bit in May, and now we're nearing that level again. So big spot for US dollar generally. Keep in mind that the British pound is well represented here, and obviously with today's move in cable, you will see this being much weaker than say DXY is, because that's going to be so much euro, right? Okay, so here's the short-term picture, and the breakdown level, concentration here is simply on this, June, July trend line, really. It was support back here in late July. As noted last night in the update, we did spend a little bit of time below it yesterday, and then we popped and finished the day above it, also holding the 50-day average. And we are now back on that line again. So clearly a big spot. I'm looking for that's that magenta line there is that long-term 25 line, by the way, that we were just talking about. So that's going to be just below. I'm looking for a break, right? Like, it's kind of dumb to say because it's like do what see what the market does and then kind of go with it. But based on kind of the general level we're coming from the dollar and all of the analysis that we've looked at for some time here, I'm looking for the market to break down. But again, we're not in a full-on dollar market, as I like to say, right? I mean, look at what's happening to Japanese yen. I mean, dollar yen's up big today, right? Pound dollar's up big today. Aussie's down big today. I mean, it's a very fractured market in FX. So, by no stretch of the imagination, is this a one size fits all thing with the dollar? In any case, at some point it'll probably come back to that. And if it does, when it does, we'll be prepared and have an idea that it's happening because we will have broken down in the US dollar. So this is where I'm looking. Last night talked about maybe 12,162, 42.62 is a level, or as levels, and of course we topped right in the middle of it. But the 200 average on the hourly, 200-hour average resistance today, good sign in terms of near-term downside. All right. So, as we go through the rest of the dollar charts, kind of think in the context of dollar bearishness. as kind of a downtrend from the top in mid-month kind of continues to take shape here, right? I guess with the understanding that it's important to don't force the issue. I mean, if we start to turn up off of this for a bigger correction, you're gonna go back to that dollar pain trade, right? We don't want to get stuck in that. That's for darn sure. Okay. Euro. Let's look at euro. With euro here, we are just looking at just a short-term structure here that continues to hold. I mean, here's the hourly. It's continuing to find good support. Now, look, I still think the two levels for me that I think are kind of trading levels here are going to be, you've got that 1628 area. That is the high volume level, again, from, I guess it was last Friday. And then you've got, if you just look across the chart and you can kind of see 16, the general area of that 1630, whatever you want to call it, is a great pivot and has been. So, resistance here August 8th, support back on July 27th. You've got some even back all the way back in, say, June. You had a spike low there. Some resistance here in mid-June. I mean, there's a lot there to like in terms of, maybe trading into that area, or if you get a dip into that area. The question is, are we going to get a dip into that area, right? I mean, just, I guess this morning you would have been, kind of geared up, ready to maybe buy 1628, 1630. But then I guess you had the comments from Barnier come out and cable ripped, and euro got a boost too. So we've gone 1650 back up to 17 and change. It would be almost perfect if we could kind of come off a little bit here, right, and get maybe a three-wave drop back into this area and get a shot at buying not just 1630, but by that point you might actually have the 200-hour average up around there too. So that would be something that I'd be, kind of in my head thinking about doing. On the upside, 1770s, big time. We'll go to a 4-hour chart. 1770s, you can see you would be taking out these highs here from July. You would be taking out, or getting close to, excuse me, the high from early July. And most importantly to me, it is the underside of the parallel, right, that extends off of that March low, and that was resistance in May. So that's your big area on the upside for 1770. I mean, I know it seems like it's kind of been an unrelenting drive higher in euro. Got out of longs at 15, but from that point, I'd like to be buying 1628 if you get a shot. Otherwise, I think 1770 could be a place to fade it. And if you get over that, then you're really going to go probably parabolic or something in a near term. But that's where my focus is, okay? Another thing that I would like to share real quickly. So let me bring over the other charting package here. But hold on here. All right, let's bring this over here. Something to keep in mind is actually the monthly chart. So August ends in a couple days. Look what that monthly candle looks like right now. Now again, we've got 2 more days of the month, so this week is the end of August, but look at that monthly candle. Is that something or what? Now, we opened the month at 1691, so in order to get a J spike, which is a reversal, right, a monthly one, we would want to close, or we'd have to close above 1691. Now you can see at this point, if we close today, or if we closed right now, for the month, you would have one, right? Because you're closing above 1691. But you can see the monthly J spikes are denoted by these magenta bars. Right. Last one was actually the low in January 2017. You can see the other ones. Got some pretty good ones on highs. Not so much this one actually, but back here, of course, in May of 2014, May of 2011, and then you've got some that really, frankly, didn't work very well. So whatever, just kind of wanted to show that to you. It's important. You know, monthly chart could have a massive, massive reversal. So good to know. Dollar Swiss. Dollar Swiss franc. So we had a head and shoulders, did not get triggered on it, but look what's happening right now. So the head and shoulders from Friday, we had an entry to short, like, what was it, 1998.74 or something. Just missed, but we are, as of, you know, right now, we are below. This is the 2017 trend line. Go to the daily chart. You've got the 200-day average, and it's not shown on this chart, but the year open is 97.42. So you're making a pretty good move here for dollar Swiss on the downside, and this could be kind of the launching point, if you will, for a bigger move lower. One of the good things about slope analysis, median analysis, whatever you'd like to refer to it as, is as you move forward in time, you get, you know, more important points of reference. So a lot of times it's very difficult psychologically for us, you know, as humans to trade or chase, if you will, a breakdown or a breakout or whatever. Well, with this method, it kind of gives you points of reference at which it's appropriate to do that, right? You can get good reward to risk opportunities even after the move has seemingly kind of already gotten underway, and it's kind of scary to enter because your risk point seems so far, right? One of the best ways to do that with median line analysis is with the median line itself, right? So we always talk about, or, you know, show examples of acceleration around median lines, acceleration, you know, after you trade around the median line for maybe an extended period of time. And we're starting to see that here in dollar Swiss. So the drop we had into yesterday, you know, we under the median line popped back above, and now we're accelerating to the downside. So those of you that have been with me for a while, you know, one of the things I like to follow, one of the setups that we like to use or implement is called the zoom and retest, right? So this is your zoom, dollar Swiss or anything, but in this case, dollar Swiss, it zooms to the downside through the median line, right? And what we're looking for here is, so here's your zoom and wherever you go, and then eventually you come back and retest the median line, right? So like this, and then that's your short, and then you can keep going. So this is, you know, the setup on dollar Swiss, or how I would look to play it, okay? In this case, you'd be looking for resistance around 97.50, and really you could put a stop at like 97.80. I mean, you just go right above this high, because, you know, if this is going to work, it's going to work from here. So we'll see how the day ends. No need to do it intraday because you do want to have a good close down here in order to suggest that you have the first part of the setup called the zoom, and then you look for the retest. Ty with a question saying, is that a reversal month as well? I assume you're asking about dollar Swiss, And no, I do not believe it is. It cannot be because you did not trade to a new high in August, right? This would have been July up here. So you cannot have a reversal if you have not traded to a high or a low, right? And we did not in dollar Swiss. Keep in mind too, I'm not going to go into it at this point, but or show it right now, but Swiss franc has been one of the very crowded trades in as per COT data. Okay, so it's something to keep in mind there. For downside potential, by the way, in dollar Swiss, your target from this head and shoulders here is like 96.66. I think probably can get more than that, especially if we've entered kind of a broad downside trend in the dollar. Let's see where the 618 comes up. I'm telling you now, I would just be targeting the lower parallel down here, and that is going to be 618, 95.24. That seems like a really good spot. Lower parallel, 95.25. Former congestion area in April and March. Yep, that's where I'd be looking. Okay. Moving on. Cable. So this would be kind of your story of the day insofar as currencies are concerned, right? With the big move. Actually could see us trade off a little bit here. You can see why. You've got the parallel here, which I don't know why I have it all the way over there. It'd really be like, you know, up here, kind of up to here, right? I mean, trading off a little bit here, but clearly you've got what I said before about the dollar. You want to look at this in the context of dollar bearishness. So check this out. If we look at, see this trend line, original beautiful trend line here, we go all the way down to hourly chart just to show how clean and wonderful this is. Here's what I would be doing as far as orders are concerned. You see that? Ding, 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 ding. Let's see if you can get that to buy cable, right? Might not be getting this high necessarily. The level I was thinking, I guess you could, but the level I was thinking was actually this one down here. So that'd be 29.57, which you can see was also resistance here on August 8th. So, you know, basically buy the blue line. I mean, really, that's it. And that's going to be your best bet in terms of getting into a, you know, a long position for cable with a relatively tight stop. Okay. Sorry, I'm trying to get this figured out here. Okay. All right. So here's the hourly chart. Be looking to buy this line so you can see what I did there and how I drew that. I will, of course, send out orders to buy it either via Twitter or you know, in the update as always. And yeah, we're just looking to buy down here 29, you know, depending on when you get there, it could be 29.40 or 29.60 over the rest of kind of the day. And I don't know. I'd be looking for a decent move to the upside. I mean, you want to target this line first. That's where you're probably going to have some sort of a pullback potential. But in terms of like, upside levels, you've got, well, about like 3120 is going to be I think the year open. Let's see here, hold on. 3124 is actually the year open. So that's going to be that's a good deal higher. And remember, if and when you break through this line, this is the slingshot setup that we've talked about before. So, say we come in here, break out to the upside, right? Then this line becomes support, right? That's what you want to watch for. So it might be one that, considering where we're coming from in cable, kind of like how sold out it's been. The COT, don't forget that, we have some major bearish sentiment kind of extremes going on with cable as it pertains to the COT reports. I did put that up somewhere on the website. Hopefully some of you saw it. Here it is, metals and coffee ownership profiles were a major term potential. The first chart in here is British pound, and you can see the only time we've had kind of this extreme positioning. Yes, there was the post-Brexit period, which the post-Brexit bottoming process, if you will. But other than that, you really only had it back in 2010 and 2013 for a time. You had some big moves off of those, right? Really big moves off of those sentiment extremes. So, it might be one where you kind of want to give it a little more, try to get into the trade, maybe give it some leeway on the targets as far as the targets are concerned. Okay. Alrighty. I'll do more when it comes to this later, like if we have, trying to do some Elliott measurements or something. For now, all you should worry about is simply, getting in with a decent entry and stop. And again, it's the blue line. Got it? Okay. Moving on. Aussie. While we were sleeping, or at least I was sleeping, Aussie, we were able to get short and we were able to get out at basically the low. So we kind of took the day's range in Aussie, which was nice. Again, nothing fancy here, just kind of trading levels, right? 73.60 is a spot. We went there yesterday, we stopped, so we put in an order to short it. 73.44 tight stop. Targeted 72.80 because we had 72.71 as the fib, and kind of learned lately that, especially in the lower volatility environment that we've been in with some of these currencies, that it's important to put your targets, and your entries for that matter, at least a couple pips on the other side of that trade. So like 72.71 is the level. A lot of times I'd be targeting 72.75, but in this case it was 80, just because the worst thing is not getting there, or missing it by the spread, which has happened a couple times. So I'm looking at a long now in Aussie. You are getting a response here. Ty with a question. Interesting wedge under construction. Ty, I'm guessing you're talking about maybe the Australian dollar. I'm looking for us to kind of get up and out of here at some point soon. So, hitting supports, might drift a little bit lower. 72.60, 72.70 again would be a kind of a great spot. Insofar as the wedge is concerned, I'm not sure exactly where that is coming into play here. Hold on. Looks like the dollar's kind of taking a fresh hit right here, isn't it? Doesn't look like we really have anything in terms of maybe the Chinese PMI, but it doesn't look like we have anything specific to Australia data the rest of the week. Either way, again, as you know, I don't really care. I do want to know when these releases come out. But yeah, we've come into the area where we should be looking for support and looking for upside, right? In Aussie. Now, look, Kiwi I still like better, and kind of explained why a couple of days ago, right? The main reason, of course, was, we'll go back to it right here, was RSI, the way RSI was acting on the 4-hour chart. So, you know, we had your big move off the low, Aussie, you got an overbought signal on RSI, but wasn't so, it wasn't extremely overbought, right? You actually, contrary to what many say, or ironically or whatever, you want to see an extreme overbought when you're coming off of what you think might be a low. That just tells you that there's a lot of a lot of power behind that move, and that's what you want to see. And on the pullback, we did not go to a new or another oversold reading, which is good, but you'd like to see a hold 40. In other words, you just want to see a better, more constructive RSI profile. Okay. Well, this is what a constructive RSI profile looks like. Okay. Extremely overbought, right? Near 80 on RSI. Pullback holds above 40. Okay. Now, since then, we've kind of shuffled. We're still in this. We were at break even on the stop, and it was missed by a pip today, or like 0.3 of a pip, I think. So still like Kiwi a little bit better than Aussie based, or because of that, I should say. And I'm still looking kind of towards the 68 area, right? You'd have two legs up at 67.96. And that, of course, is also your February, March trend line. So just looking for the channel, trading from the low channel to the high channel, right? Now, look, if we end up coming back down, I'd kind of be looking at support between two spots. So I'd look at probably the 62.60s. You might just nick out that low here, August 27, and 62, 62, 60, 62, or 66, sorry, 66.70. And if we break this channel, I wouldn't necessarily get extremely bearish on it just yet. I would look at the median line and see if you hold that. And if you hold that and come back within the channel, then I'd look at it again. Just kind of a heads up on what maybe to look for. But yeah, I'm still like Kiwi higher. Aussie, I'm starting to look for a low here now, but I think Kiwi is still the better bet, although that could end up changing soon, given his Aussie Kiwi come back into to its levels or its average yet. Let's see. Remember, that was something we were looking at too. So we're getting close. So Aussie Kiwi, we got the 200 average and the trend line down here at 108.43. So we're currently 108.84. So getting close to that level. And if we drop into there and hold and turn up, then you might actually have, you might have reason to kind of switch the bias as far as being more bullish Aussie against Kiwi than say Kiwi against Aussie. Marco, sorry, I missed the part on Aussie. Did we have a trade on? So last night, there was in the update last night that was sent out, the swing update, you can see right here. Short, there's a pending trade, okay? Short at 73.44, stop 73 and target 72.80. So there were two trades actually. There was this Aussie trade and there was a pound yen trade. Pound yen trade got blown out real quick. Thank God, because he would have been killed. So yeah. And then we have a couple things on the watch list here, which is dollar CAD short. Hold on. Can you guys still hear me? I just saw that I lost some data here. Oh, okay. You guys can still hear me. Good. So we have two things on the watch list: dollar yen long, although at this point that's starting to get away, and then dollar CAD short. Marco says, at what time did you put it on? So Marco, what time was the trade put on? The trade was put on whenever it was triggered. So these are orders, right? Marco says you wrote it with a, yes, I did write it. That's correct. I wrote it. This is always sent out right pretty soon after the U.S. close. Yesterday it was sent out. It was sent out. It was actually sent out earlier yesterday than normal. I guess. Hold on. We could see where the tweets are. Yesterday, swing update was sent out at 4:42 p.m. Okay, so there you go. So yeah, but the swing updates are usually published between 4 and 6 p.m. Central Time. So, and I always send those out via Twitter as far as the updates, but you can always just go to the website too and check it out. Okay, so where were we? Okay, let's look at dollar yen and dollar CAD. We have not looked at those. Dollar yen. Kind of annoyed on this one. We had this pretty good. Like we were looking for, we were looking for buy down here, 110.70, and just never got it. And here we are now, back unchanged on the month, actually, funny enough. So it's been a round trip. Now, this doesn't really change my count. So maybe something like this. We talked about this maybe being a rare leading diagonal. Okay. And if that's the case, then, you're going to have a pretty deep retracement. Leading diagonals are usually pretty deep retracements. In fact, a 786 retracement would be not uncommon after a leading diagonal. And that would actually put you 112.47. You know why that's so awesome is because 112.47 is also your daily reversal level, which was the 719 close. Okay. So we might be looking for a high up there at some point over the next couple of days. If you want to get specific on it, you would actually, excuse me, we would actually intersect the median line of this structure from back in the day all the way back to February. That would be up here on like the 5th or 6th of September. So that would be a week from now. Next Wednesday is actually the 5th. So you got some good room from here to there, which means, excuse me, hold on. God, I love when school starts and kids get you sick. All right, so that would happen, yeah, again, over here. In the meantime, again, you're going to have the month open right here, a couple pips higher. So I would be, I'm not really jumping at the bit to short this, but if you did kind of pull off of the 80s, 80, 83 area a little bit, I'd look at like 111.57 or so. 111.50, 111.60, that range as kind of support, if you will, right? To take it higher. This is the pound yen trade, right? So we shorted here, and thank God the stop was hit here because you'd be really ruin your day. People that don't use stops, this is what happens. Okay. All right. Dollar CAD. A couple things on this one. I don't really have a strong bias on dollar CAD right here. With all that I've kind of talked about with the dollar, you would think I'd be like, scary bearish dollar CAD here. But here's the problem. This setup looks great, right? So 130, 130 20s, as noted last night. This is where we're kind of looking at, wanting to be short, right? To me, this would also be a retest. The magenta line here would be a retest of a head and shoulders. So you got a shoulder here, kind of a double head, another shoulder. So you got a head and shoulders, right? Target for that is actually 28.52, which is also the exact low from June 6th. And it's also the lower parallel, pretty close to there. So looking to that region. But, here's the thing. Here's the long-term chart, right? 2012 trend line, top side of 2016, 2017, and then right there. I mean, this is a big spot, okay? That's simple. It's a big, big, big spot. So you got to be really careful. Like I do want to short up in this area, right? 130, 130.20. I'm telling you right now, stops are going to be 130.55, okay? Which is going to be above here because I'm not risking anything above this February, April line. Because if you get back above there, I'm kind of worried about the potential of like a slingshot type of rally turning into reality, okay? Because you're coming from a big spot, right? It's not like we reversed at a random place. We reversed at a place it's been some major support. And that's primarily the trend line back to 2012, but it's also the top side of that 2016, 2017 line, okay? So those are, that's the thing here. Now also, let's say, just for, potentially, let's just say that we get, let's say that you get like a strong move up. Let's say you get a 5-wave rally from here, right? Let's just say that happens, just for argument's sake. Say you get a 5-wave move up into this area in dollar CAD. At that point, I think it'd still be worth maybe a short, because you'd be looking for a pullback anyway. It'd be a much shorter term trade, and I'd probably just go with a smaller trade size. But at that point too, you would also have the ability to potentially buy a pullback, right? So 2 things to know on dollar CAD over the next day or 2 or whatever. You've got 130 to 130 20s as a level for resistance. At the same time, you do need to know that we've come from this area, and this area is important. So, if you get kind of constructive short-term price action, I'd actually look at taking the other side, even though that is in total disagreement with what I think is happening with the dollar. But again, you do have to trade each chart based on its own technical merits and its own patterns, okay? All right. Let's visit our friends in metals, and we can also go look at, I guess we can look at some stocks. I mean, I don't really know what the point is. All you have to do is be long, and I mean, there's no risk, right? I'm being facetious. You can see I'm joking, but like, all right. I really don't actually have a lot to say at this point in terms of the metals. We've kind of already covered it all, right? So remember this long-term magenta line that goes all the way back 2008 low, but then you extend to the left and it hits a ton of stuff. So like that, to me, as long as you're above that, this is a bull. But near term, you could still go back and hit it, right? So I think the low in gold's in, and I'm kind of buying. I'd look at buying dips. That's all there is to it. So I don't want to. We covered gold a lot in last week's webinar, so I would go back to that and look there. There's really no need to rehash all the same stuff that we talked about. Silver, same exact thing. Again, this is, remember, the long-term chart, right? This is the long-term line. You get back above that, which is 15. And you have reason to be bullish, or reason enough to be bullish silver, okay? It's all about that line. Until then, I don't really see any reason to trade silver. Crude oil. Crude looks like 5 up. I tweeted this out yesterday, said it was kind of looking for support near 68. We had a big pop here this morning on the EIA inventories, crude inventory, looking like 5 up, right? 1, 2, 3, sideways 4, pop in 5, can certainly extend a little bit. In fact, if you did basically that high at 70.50, right? 70.40, excuse me, would kind of be a spot. So up here. So if you did, but 5 up, hard to ignore in terms of like, if you just basically tells me that there's a little more risk here. That's all. All right. And if we were to dip a little bit here, I would be looking for support. So the easy move up is done, probably, in crude, and any weakness should prove corrective at this point. And if you got to 60 or 70.40, excuse me, at that point, I'd actually probably look at a short-term fade on the downside. Okay. Indices. Here's the NASDAQ. I don't have any, like, really, I have no desire to trade the indices here. I mean, I just don't. Like, you can either chase, like, here's the two options, right? You can either chase up here, or you can try to fade it. Like, neither one seems like a very good option to me. I put up this chart yesterday. It seemed like reasonable to expect some back and fill off the channel, but that hasn't materialized, and we've gone up again. So, so much for that. I don't really have anything else to say. I guess if I go back to this real quick. Hold on. So really, your next spot. Okay, so this is the shift fork. This is the S&P 500. This is the shift fork, and your next spot really is not until, like, as far as really big spots, is not until 30.37. That's a ways away. I mean, you're talking, 130, almost 130 handles in the S&P. So that's going to be the parallel, by the way, that essentially crossed the January high and was also resistance all throughout 2014 and whatnot. So if we're in a blow off type of move, then that's a pretty good place to look. Also, I'll go to the Dow. Now this is delayed, but just remember, this is a really long-term chart that goes back to the 20s. Essentially, you have a channel from the 20s based on the 1932-82 trend line. Those that have not seen this, This is what the origins are. So 32, 82, okay, extend off the 29 high, and you have this channel, a lot of which centers around the importance of the median line. And here's the parallel that extends off the 07 highs, and it was a double top action. And it's kind of similar to now, in that the initial drop hit this parallel, hit this parallel. Difference in this case is that we're putting in a lot more time between in the consolidation period. So, you know, if you drop, or sorry, if you go to a new high, you're actually looking at that parallel again, which is going to be at this point, you know, call it 26,009, 26.9. You know, that's 750 points higher in the Dow. Really is not that much when you think about, you know, if the Dow goes up for, you know, has a couple really big days, I mean, you're going to be there. So that's kind of a setup to watch for, actually, I think, is kind of something similar to back here, right? You know, I do think it's interesting, actually, how this potential blowout type of move in stocks is playing out with the dollar, with the dollar against Japanese yen, right? So, like, you know, we've had a weak dollar against euro, and today against pound, right? Here's the yen. The yen is weaker, right? So the yen's weaker, and still, though, you do have kind of, you can envision a pretty good third wave lower taking place from up near 1247, right? So, like, if this ends up being a correct interpretation, things are going to be getting really frothy and really ripe for a turn when dollar yen's up here. So I'm, you know, I'll be looking at dollar yen kind of like in conjunction with some of these indices, right? Let's just argument's sake say that we get up into this region dollar yen, and, you know, we've got reason to be short up here. We're getting some kind of exhaustion signals and blah, blah, blah. And then at the same time, we're hitting some of these big levels in the indices. You know, we could have a hell of a setup for a bigger trade on the short side for both stocks and dollar yen. Ty says, are you a dollar bear or bull long term? Really, Ty, I'm kind of like just I'm like whatever the analysis says, right? I don't want to be, I'm bearish dollar right now, as I've talked about in the webinars for a while, right? Hit some really big levels. But I'm not like a perma dollar bull or bear either way. You know, I do think that we're going to have some inflation problems. So, like, you know, that by definition is a lower dollar. But that doesn't really have anything to do with my trading. That's just kind of like cocktail party talk or something. So, yeah, that's it as far as my answer there. So, really, Ty, it's not about being, you know, dollar bear or bull long term, right? It's kind of just what the setups are. I mean, we've been long and short the dollar at various points all year, and I envision that nothing about that is going to change. Obviously, if we enter like a third wave type of scenario in the dollar on the downside from up here, then it's unlikely that I'm going to be long the dollar for any, well, at all, while that's going on. But yeah. Okay, I'm gonna wrap it up there. I probably need to like take some medicine or something. I feel terrible. And I'm actually doing a free webinar tonight anyway. You know, do some marketing here, try to get the word out. So I need to feel better to do that as well. But have a great rest of your week, everybody. I'm gonna get this archive for you. And yeah, I'll talk to you later. All right. Bye, guys and gals. And thank you for your time as always. And I will talk to you later. All right. Bye.